All right, good morning, everyone. Let's see what's cooking here. CPI is today. I don't think it is critical, but you never know. And also, we're going to see if there's any stocks that are more than in play. I think Tesla is definitely on the menu today, for sure. Okay. So, with that in mind, let's pay attention to that. Okay. I mean, the Tesla, the news yesterday doesn't seem to have impacted Tesla any, although it seemed like there was a possibility it could, given that Elon is a pretty huge figure and he was pretty active yesterday. So I still think Tesla is coiled, and we are looking at CPI for today. So those are the money moves for right now on Tesla and the broader market. So the broader market looks like this. We're at all-time highs. Yesterday was a little bit rocky, but came back right before close. Okay. So in terms of the market, yesterday was not very eventful. In terms of major news events, that was different. So let's see. Let's see where we go from here. Okay. I don't know where we're getting these titles from. Sorry, just have a little update here. Okay. Now, with CPI coming out, it doesn't hurt to see if there's any big jumps, swings. And compared to yesterday, I guess PPI came out at 8:30 and then got sold into, or who knows exactly what happened here. Here we're having sort of the opposite reaction where we go down first. But again, this is not really that important. What is important is, unfortunately, this title being changed. on X. So hopefully it's changed now. You can see that CPI title right now. Yeah. And the audio is good. This video is not ideal, but we'll work with it. You can hear me okay. Now you can hear me really well. Does help with the old posture. But right, what is today's CPI? Why don't we start that? Yeah. What? Just gotta go to the website. It's not on Gemini. Okay. Can someone tell me what this means? That would be great, because I have no idea. I know, I should know what it means, but I definitely don't. And that's mostly because I don't think it matters that much, if we're being real. There's some percentages, there's some numbers, but yeah, I just don't think it matters that much. Whoops. There we go. Okay. I will see comments as they come through. You'll be able to respond to those, filter those, help out when I know what's going on, which is not going to be always. But dang, you can't even see the left side of my screen. That's not good. It's not good at all. What is going on here? There we go. That's a little better. That's what we're talking about. Okay. Alright, now I can see your chat messages as well. I can't put them up on the screen, so don't expect to be able to see what you wrote. But you wrote what you wrote, so you shouldn't have to worry about that. But guys, for some reason, I swear this just said September. Did it not just say September somewhere on here? I guess it didn't. Is this number not out? Does it come out at 8:30 a.m.? No, not 2024. I know ChatGPT is delayed, but I mean, I'm on the website where it's supposed to come out. So. Oh, right. For August is released today. Oh, yeah, that makes sense. Okay, so this is what's happening. Inflation remains persistent. CPI increasing by 0.3% in August, up from 0.2% in July. Year-over-year, CPI rose by almost 3%, highest annual rate in 7 months. Core CPI, which excludes food and energy prices, also increased by 0.3% for the second consecutive month. So that's core CPI as well as CPI. So what is CPI first off? CPI is prices, right? How much like eggs cost. So that thing is going up. Eggs are getting more expensive. Year over year, they're getting even more expensive. Yeah, so they use gas as an example. And that's what everyone's saying. We still have inflation. I don't know what this amid tariff pass through. What does the pass through mean? What is the tariff pass through? I'm not going to be able to show this. Tariff. So I guess the tariffs are causing inflation is what this is saying. Or not causing inflation, they're causing businesses to raise their prices, which is what CPI is, which is how much stuff costs, which then is going to cause inflation. Not is going to cause inflation. That is basically what inflation is, stuff costing more. So, it's great to theorize, but this is what the market did basically. It looks like not too much. I mean, it wicked up and then sort of recovered to the level it was at like an hour and a half ago. A few hours ago. I don't think anything too groundbreaking is happening right now, inflation-wise. I get that this is up 3%, but it doesn't seem that crazy, 3%. So why don't we see what people have got to say about it? How's that? What do we have for professionals here? Here's a professional. Let's see what he has to say. You can hear this, right? You should be able to hear this. It's gonna take a second to play, just because we got a lot going on here. But yeah, you should be able to hear this. And I can actually turn it up a little. It is live, so. And I guess we don't need to be in full 1080p. Right? I mean, 720 is probably okay. Got a lot going on, guys. I mean, we really don't, but this is about as much as this computer can handle. So, yeah, we don't need to be in 1440.
Do think about that for a moment. Remember,
Seems excessive, right? 1440p. I think 1080 is sufficient.
CPI is so heavily dependent.
I think 1080 is sufficient.
Heavily dependent on trade services. And once people are fully stocked up, you
big problem,
require
actually.
fewer trade services. So then when the inventory has been built, your warehouses, your intermediaries, they're going to become a little bit more pricing competitive. Their PP is going to shrink a little bit, right? Nobody likes shrinkage, but you got to do what you got to do to stay in business. If you don't have business, you're going to shrink. Okay? You try to grow again. Everybody wants to go back to growth. So anyway, we've got, we have food at home jumped 0.6%. We usually ignore food at home, honestly, anyway. That's
This
not a
should
big
be
deal.
streaming, guys. You can hear this,
Let's see,
right?
treasuries continue to gain a little bit of steam. That's fine. Let's see if world interest rate probabilities are out. We're 15 minutes. Still only expecting about a 10% chance of a 25 or 10% chance of a 50. Auto car started taking up again. I mean, that's nominal, 0.3%. Who cares? Yeah, motor vehicle maintenance and repairs. Okay, in fairness, I don't like that either. Okay, so why would I not like?
I think this is working.
Well, first of all, I don't want any of this crap going up. But why specifically motor vehicle repair services? The problem with this is it ends up showing up in insurance in the future, right? Here's the headline category. It makes up about 1%. So again, it's like a super small component. I would say broadly, this feels like a broadly good report. That's my take on this. Like there's not really one thing that's like, things are exploding. Like the hottest thing you could really point to here is you kind of have a normalization of shelter. So I'm going to say that feels like a normalization of shelter. Remember, this is the Meet Kevin app. You can download the Meet Kevin app for free in the Meet Kevin app store, and then you get it under the data page. It's really easy, and you can customize the notifications you get for my YouTube videos as well. Because even if you press, like, I want all your notifications, Kevin, YouTube will only give you 3 a day. So if I post 4 videos, you're going to miss a notification. Guaranteed. Like, that's just YouTube's method. But anyway, it feels like a normalization of shelter propped up inflation here. Nothing super scary. However, the motor vehicle maintenance jumping 2.4%, only 1.03% weight of CPI, was a bit disappointing, but overall minor. Now, this, again, the reason this matters, it can show up in motor vehicle insurance in the future, right? Because it means their core costs have moved up. Honestly, I'd say this CPI report so far, this is a bullish catalyst, which, is a reminder that we've got coupon code bullish catalyst going. If you haven't seen it yet, let's see how the market's doing. So yesterday, with coupon code bullish catalyst, in the alpha report in the morning before the market opened up, we called CoreWeave's rally. We were at $109. We sent out the alpha report. We said, this is a technical setup. You can't see the technical setup right here. We showed a technical setup. We go, I had a thesis that this is going to run to $125 soon, by the end of the month. It literally ran there within 2 hours after opening. If you want those sort of calls, make sure you get that lifetime membership at meetkevin.com and get that alpha report. Mind you also that in the pre-market yesterday, I said, guys, people are going to look at this PPI number and they're going to realize it's a temporary thing. And the Qs I think the Qs the top is in for the Qs. People are celebrating this low PPI, but they don't realize the components don't actually mean CPI is going to be low tomorrow. Sure enough, it wasn't, okay? I mean, the old news, like we already know that at this point. But the point is, the Qs then bled the entire day. Also, another call yesterday. We made 2 calls in the alpha report yesterday, CoreWeave and the Qs, and both of them nailed it. So if you want to be part of that, remember, you get that lifetime access to the Meet Kevin membership over at meetkevin.com. Just use coupon code BullishCatalyst. All right, let's see what else we got here. Auto cost, we got household furnishings, a little bit of note there. Apparel, okay, fine. The note on apparel up 0.5%, driven heavily by shorts. Yes, literally shorts. And yesterday I was shilling shorts so hard that I actually made an Amazon affiliate. Like, this is stupid. It's going to make me like $5, but I just think it's fun. I made an affiliate link for shorts, and you go to meetkevin.com/shorts1, like the number 1, shorts1, or shorts2, and then the number 2. Anyway, I love those freaking things. I think I've bought like 25 pairs of those. Airline fares jumping 5.9. Yeah, that's the pisser, right? That was a pisser. Pisser of airlines up 5.9%, but that likely won't
All right,
last
guys, I gotta take a break from
post-summer
this. I'm sorry.
IMO. I know
It's too
these are
painful.
seasonally adjusted.
Let's watch a little
So
bit
I
of
will say that, though that is
Jason Shapiro
seasonally
instead.
adjusted, I'm compounding
Market Wizard, Jason Shapiro.
uncertainty plus post-summer, right? Like you've got a lot more uncertainty this year than you did last year, and I think seasonally that'll be a little bit different. Okay, we've got let's see here. Core CPI is now up 3.1 for August, same as July, same as forecast, so nothing worse here. This is a relatively benign reading, I think. Relatively benign. You know, there are again the coming back of housing inflation. That's probably what we have to really consider here, because that will be something that contributes to inflation for a long time. So I'm going to say that the issue here is housing disinflation was really helping dump U.S.
Today was
Sorry about the double audio. It'll stop in a second.
not a good day for the markets.
I think he was just talking about his
We
conference.
have been talking for quite a while about what I see as the narrative that's been driving the markets. And that narrative is the fact that we're going to get lower interest rates, and therefore that was bullish bonds or bullish fixed income, bullish the stock market, bullish gold, and bearish the dollar. And that's what's been happening almost on a daily basis. It's been like one trade, and that was it. All four of those trades are one trade based on the narrative that rates are going to be lower. And that narrative is starting to get old, and therefore probably less valuable. But whether we think that, it's just like anything else. We might think of that, but we need the market to confirm it before that becomes true. Well, today we certainly got the market to confirm that, because we had obviously a PPI number that surprised to the downside, and the things that are supposed to benefit the most, in theory, the Russell and the Dow were down the most today. So that's sort of dart one thrown in that theory. Dart two was the dollar. I mean, bonds were fine, right? Bonds went up today. And that's fine. It did come off highs, but went up today. Fixed income went up today, except short end didn't, by the way. So we did get some sort of 230s steepener, which is the first sort of steepening we've seen in a while during this. But look, the dollar did not go up today, and I mentioned in yesterday's video that the euro kind of failed yesterday, and we have people pretty long euro here. Failed yesterday when it shouldn't have, and it failed again today when it shouldn't have. The dollar should, as we're talking about the narrative, the dollar should have been lower today, and it wasn't. It was higher. The dollar finished up on the day. So there's sort of dart number two put in this narrative, right? And gold also was crap today, right? Finished down on the day. So there's dart number three thrown in this narrative. So this narrative is starting to weaken, is my point here. And look, tomorrow we have CPI, and we can start all over again. Just because the narrative doesn't work for a couple of days doesn't mean that it has to be over. This thing can just pick up again, you know, obviously. But just looking at the evidence that we have right now, we see a weakening of that idea, of this lower interest rate idea. And that's really what's been driving the market. Now, there is, of course, one other thing that has been driving the market higher, which is the AI narrative. And we certainly got a piece of news with the Oracle stuff that supported that narrative as well today. But you know what? The Nasdaq closed down today. So we have to ask ourselves, if lower rates is not going to get things going, and and projections from companies like Oracle that are just more than anybody could ever imagine. I mean, literally, the numbers they're talking about are so big, you know, to the point that, you know, Oracle stock was up like 36% today or something, right? And it's not a penny stock, right? It's a multi-billion-dollar corporation. If those things cannot get the market to move higher, then what is? You know? And the answer could clearly be, well, more of this stuff, more rate cuts, more AI earnings stuff could get the market to go higher. And of course, that's true. But for now, again, as of today, that stuff did not get the market to go higher. And that is the stuff that has been getting the market to go higher. So if that stuff is failing, then things are changing. Risk reward is changing. All right? Does that mean short everything right now? No. I don't think that anything is necessarily set up to short equity wise, which doesn't mean that it can't go down. But there are things you can start to look at, right? And as I mentioned in yesterday's video, I thought the euro is probably the lowest hanging fruit there is because of the length that's in the euro and because the euro is starting to fail and because of this narrative about weakening dollar just being very, very consensus. You're going against consensus if you're shorting the euro. You're going against positioning if you're shorting the euro. And you are going with market action from yesterday and today if you are shorting the euro. And those are the key things that we want to be with. Does it guarantee it's going to work? No. But you have a nice stop, either at yesterday's high or truthfully after today's news, you could probably short the euro versus today's high, right? If we get some kind of super weak CPI, today's high is probably not going to hold. It might hold by the close, but intraday it's probably not going to hold. Yesterday's high should hold, even if we get some sort of weak CPI tomorrow. So that's really the thought here. The main thing being, are we losing the narrative? And if we are, what is the next thing that can push this, right? And the market is starting to give some hints that could be the case here. And the risk reward may be to start going the other way in some places. And as I say, the euro being, to me at least, the lowest hanging fruit place. Okay? So those are my thoughts for today. As always, I hope that helps in some way, shape, or form. Please like the video if you like it. Thanks for listening, and we'll talk again tomorrow. Thank you. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right, and we hope to see you there. Thanks.
Okay. What else is useful? Probably not a lot.
Hey everybody, September 9, 2025 here with your end of day recap. We've got Oracle, which was the big one, distant 25% in Oracle, which was the big one, distant. I mean, just absolutely awesome and massive. I think they said that they've got a backlog of like $400+ billion, which is just kind of mind-boggling to wrap your mind around that sort of number. And a really nice reaction to its earnings. That is giving a little bit of life to an NVIDIA in after hours. That is giving life to an AMD. That is giving life to a CRDO, etc. So really nice to see semiconductors are acting well today. You had a decent little reaction from Palantir today off of the 50 simple moving average. That is exactly what you want to see, right? It's just been digesting here for the last few weeks, but everything is tightening up nicely, kind of just surfing the 50-day. The way the market's acting, the way mega caps are acting for the most part, in particular semiconductors and these continued growth names, Palantir, Hood. It just looks like Palantir will be going right back up, barring some big expectation breaker going forward. Amazon to me looks absolutely awesome. Looks like, I kind of said it earlier, just stick this thing at 250 and start from there. You break out of this cup and a handle setup, I would have expectations for higher on this name. Google just continues to grind higher. Looks absolutely awesome. And then Tesla just sitting here in a giant weekly chart. My expectation is that when that 258, 259 level gets taken out, we probably end up going higher. Congratulations to those of you guys who have had conviction in UNH. Today was a huge day for that name on a big pickup in volume, kind of into this gap fill zone. I wouldn't be too surprised if we can go and test. This is a Stan Weinstein 4B setup, right? You get above the 50-day, you digest, shooting up to the 200 simple moving average. Seems like it could definitely be in the works. But ultimately, just a pretty nice day in the market. LEU, I thought, was a nice one today. Of course, I decided to go with CCJ. That's just kind of my luck. But about $208, this thing looked pretty good, and then just took off all day long. I took CCJ, just a half-size position, and widened out my stop a little bit more. So I'm just comfortable sitting, even though it really didn't close all that great. I am just still sitting in it. I did add some MP today. I was hopeful that Apple during their event was going to say something in relation to MP, but, they didn't. I still love the way this thing looks. You have a really, really tight inside day on 9/8. You are, checking back into this 50-day. For me, instead of, buying breakouts, buying pullbacks to ascending moving averages has been the better move. MBIS, I cannot forget to mention this one. Super, super nice move. Big gap up. Hit $100 and, almost $10 yesterday in after hours. This pullback in the morning, very, very nice. Probably had some good profit takers in there and then started to turn back up. Unfortunately, I didn't get involved on this 620 setup. That would have been pretty good, right around $90. Set your stop at low of day, about $4 or $5 of risk, and then you're already up a nice little multiple of that going into tomorrow. But ultimately, I think the market is acting fairly well. I was hopeful that Hood was going to stop for a little inside day today. It did not. It then ended up ramping towards the end of the day. I will keep an eye on this thing tomorrow. Along with NBIS, you had really nice moves in Wolf. Again, nice little morning shakeout, reclaim yesterday's highs, and then a really nice ramp up, continuation in after hours. Iron, same deal. Wolf, same deal. Iron, same deal. Hut, same deal. These things are just acting well. They're just moving as data center plays. Galaxy was another one. So there is a ton going on around the market. Solars kind of got cracked a little bit today. You could kind of look at something like Sedge. At one point it was down like 12%, a little bit more, bouncing near the 50-day. We'll see kind of what this acts like going forward. A little bit too much volatility here for my liking. We'll see if this thing can tighten up and give us a tight little day maybe against the 50 going forward. FSLR, same deal, finished the day, nothing really serious, nothing kind of like Sedge. You pull right back into the last prior day lows, last couple days, you bounce right off the 20, you close fairly decently, nice tight day. We'll see what this thing acts like tomorrow, but, solars were kind of a no-go today. Money was flowing into, some of these prior leaders, Palantir, Hood, NVIDIA, AMD, all acting well. NBIS, a bunch of these data center plays, obviously Oracle, the big one. So
This looks good,
from my
though.
perspective, it looks like everything is okay. I did notice Morgan Stanley, nice job making an all-time high today. I saw J.P. Morgan. This thing's also, hanging out fairly well. You have Citigroup. These things are just acting and hanging out really, really well, just building out a new base after a nice move up. So, yeah, I just don't really have too many negative things to say about the market. Has it been a little bit choppy? I think that's fair to say, but I did find myself as a buyer today. I finally added on to my ARC position. This thing looks super, super nice. I added on to PDD, not quite as strong as I was hopeful for. It was acting really well in the morning, and then kind of went on to give some of those gains back, but
Slow moving.
still just holding on to my ads. No big deal. I added on to Tesla as well, and again, this thing is just digesting. I think, just trying its best to piss everybody off, myself included. And then new positions, CCJ, and again, hindsight's 2020. LEU was definitely the one that was acting a bit better today, and then MP, using that 50 simple as my guide. So I did put on a little bit, maybe more exposure than I was thinking I was going into today, but these were all kind of names that I was prepared for, so that's nice. And the market continues to act well. I don't see anything out there that would give me like some real pause that the market's trying to actually go lower. Gold today had a bit of a pullback, nothing serious at all. Probably could use some digestion through time or a little bit through price here. We'll see. But ultimately, I mean, shit looks really, really good. You had these really big moves up yesterday. Obviously, Octo was a massive one. And then today, who doesn't love a good China scam? You go all the way from, a couple of bucks all the way to 300 and change. So that's just unbelievable. This is a name that I was watching, but this move here is something you really don't. I mean, I saw Nate from IU. Massive respect for Nate. He put out a message on some of these, and just there being a lack of supply in these names, and Octo kind of caused the perfect storm for a name to do this kind of thing. Sorry if anybody got hurt in a name like this. That's never ever fun to see. But yeah, ultimately the market is acting pretty dang well. AppLovin continues to act well. ANET continues to act well. CRDO continues to act well. Coin woke up a little bit today, so that's nice to see. And ultimately, I mean, things look pretty good. I don't really have a whole lot more to cover outside of that. I think the mega caps are acting fine. I think banks are acting okay. Would be nice to see semiconductors, kind of start acting well together. Obviously, we have seen AVGO gap up on earnings a few days ago, and this thing continues to hold in there really well. Obviously, ramping up a little bit in after hours with what's going on in the semi space. But is there something out there that can carry the market that truly looks bad? Right? Semis look good, banks look good. And to me, those are the two most important groups. Growth names are kind of coming back along. Even quantum stocks today. It's like, like a Rigetti. This thing's just been digesting for months and months and months and months. And, you're just refuse to lose the 50-day, get nice and tight along that 50-day, and then take out prior day high. And then you're off to the races. So, that's pretty good to see. IONQ as well. Another super massive base. I don't just want to be negative on names for the sake of being negative. This thing was digesting here very nicely as a bull flag after finding support at the rising 200. So, even as much as I dislike quantums, these names are acting pretty decent. So, we'll continue to just take it one day at a time. I did add a bunch of exposure today. Like I said, way more than I thought I was going into the day, but the market kind of pulled back in the morning and then started to find its legs, and you had that big gap up in NBIS, and yeah, I mean, no real complaints. The only real thing left for me to do is wait for Tesla to give us the all go signal so I can load the hell out of that one, and hopeful that I can make that one my biggest position here pretty soon if it would like to get going. Otherwise, today was a pretty pretty okay day, I thought. And we'll just continue to take it one day at a time. So anyway, hopefully this video finds you guys well. Short and sweet today. Like I said, I'm like scratching my brain, like what was truly negative out there. You know, the only other thing that maybe a little bit negative, but the daily looks just fine, was, you know, the reaction to that Apple event. But, you know, who cares? It's above the 200, it's above the 20, it's above the ascending 50. I mean, you know, are we going to nitpick because this thing has one little down day? I don't think so. So MU is another one that I've been trying to get myself in, and just beautiful continuation again today. I thought last Thursday was perfect, and we're just off to the races multiple days in a row. So nice to see. And yeah, we'll just kind of scan a little later tonight and see what the heck we can get involved in.
I always
and
forget
even
the Apple
Baba,
ticker.
God, there's just so many of these names kind of come into my mind. Baba looks like it might be trying to break out of a multi-year base. So, I mean, look at this thing. You know, it looks like we're trying to go higher here as well. So all the biggest weekly volume bars, they're all accumulation. And it looks like, you know, Baba could be ready for that next leg higher. So we'll see. There's just really nothing to be super negative about until things are actually breaking down, which it just doesn't look like they are. So Oracle for a moment was living below the 50 there, but that rocketed higher. Hood shook everybody out under the 50 and then gapped up higher. And names are just out here making all-time highs. So that's really good. Anyway, hopefully this video finds you guys well, and I will see you guys all bright and early for pre-market prep. Cheers.
Okay, guys, so I would play pre-market prep, but I mean, this has been going on for probably an hour at this point, 45 minutes.
Which I might. And it also depends where I own it. Like the last thing
Yeah,
I like
and
doing is
then
watching a nice green
it's just kind of a mess because people are asking questions, and some of the stocks are really not worth looking at that people ask questions about, right? So why don't I look at some trades here from this week? So Ariel was talking about, let's see where I can do trades. Yeah. This is Adam. Okay. So let's take a look at this QMMM. And you know what? I think I'll just sort of do a breakdown here. Yeah, let's do a little breakdown while we're here. Maybe specifically on this QMMM, which is this China. It's technically a stock, but man, I mean, I don't know why the 18,000 isn't showing here. It's only showing once you zoom into it, but oh, do I have this in percent instead of I guess I should have this in dollars instead of percent. How do you do that? I know there's a way to do that. This is the right time frame. I just can't figure out how to do dollars instead of percent, but I guess I'm just going to live with it because it does actually show the dollars here. You just have to click in order to see it. But God, I could have sworn there was a way to show just percent. Oh, here it shows dollars. I guess it shows dollars here too. Oh, the K is just really small, I guess, so I didn't notice it. All right, I'm just an idiot. Okay, here we go. So I don't specifically know. It's not even worth looking at what the news is here, right? Because it's fabricated, and it's possible there was no news even released at all. Okay, so let's just get cooking here. And I'll take a look at that right here. So when I move over here, there should be a little bit of a sound, just like when I move here, there should be a sound. If I just go back here, yeah, should be no sound. Okay. Just loading up some of the stream here. I don't know why we're still loading, but it does appear that this is in the loading mode. Is the stream spinning for anyone else? Loading? How's that? No, it seems to be okay on YouTube. Seems to be okay on YouTube. Is it okay on X? Paging X. Do you Twitter folks see a spinning icon, or do you see something better than that? When I look on Twitter, I see a spinning icon. Let's see if we can just go back to some pre-market prep and at least get some audio going here. Okay. YouTube should be working.
Morning, Trevor. Good morning, everybody. So CPI just came out this morning. Really, only jobless claims was higher than was expected. Everything else was kind of in line. We've got a little bit of volatility, but well, it really depends what the market's going to do today. There's still a handful of nice looking names. Also, consider that pullbacks to moving averages have been viable for about the last few months, and that's not really changing here. At least not for now. Right, so even something like Palantir, when it got down to its 50, became viable. Right, maybe something like MP, as it's approached its 50, becomes viable. I'm not sure. Yeah, Roblox has done a nice job hanging in there. Yeah, SoFi looks good too. Again, I don't really know how the market's going to react by the open, so too hard to say. Yeah, Netflix, and this one will move with Spotify too. I'm not too quiet, guys, right? You guys can hear me well? Cool. MPWR is fine. This thing looks pretty good. No,
Pretty quiet.
I see no problem with
I thought it was
MPWR.
me. That's why I said that.
No, MP still holding the 50 simple moving average, but I did take half of it off yesterday when we were breaking prior day low. But as long as we're going to hold the 50, then I can hang out with it. What's my scanning process? I do a lot of my scanning in the evening, right after everything has happened. Right. Also, while I'm sitting at my desk, like if there's nothing to buy, or I don't really see a nice setup, or maybe I missed something, I'm not only tracking my current positions, but I'm also scanning the market for what's holding up best, what's being distributed, what new setups look good, what stocks are hitting highs, what stocks are hitting lows. Like, I'm constantly trying to put pieces of the puzzle together. So when I do get to the evening, my scanning's a little bit easier, but then I just run through my scans, whether it be a 90-day, could be just a 90-day relative strength scan, could be up on volume scan, and I just go through my scans and I say, oh, okay, very nice. Home builders are acting well today. Oh, and they've got pretty nice setups going into, the end of the week or the week if they do XYZ, right? Maybe they tighten up another day or two, and then they'll give me an entry. And then so back of mind, I'll have a couple of home builders on watch. I'll set my alerts, and then I'm ready for them, later in the week. But it all comes from like me being at the desk and then seeing what it is that's moving, and what it is that's going down. If I see a bunch of software stocks going down, I kind of know to avoid them, right? I don't like to cherry pick weakness, unless of course they're pulling back into
I was
ascending
looking
moving
at
averages.
Nail
Then,
earlier,
you
home
know, we
builder,
might have a different conversation.
which actually looks okay still.
Yeah, team. That was me messing with the volume on accident yesterday for some reason, but that's why I asked you guys this morning. So they should be good in the room for later. Those videos are fine. I'm not in the Market Wizards book, but I am in contact with George Coyle, who is the co-author of this current one with Jack Schwager. And George just needs me to have about another 5 years of longevity, and then maybe the next one. Fix taking off. Yeah, nice name. Looks great. Awesome earnings and sales, too. I prefer to buy things on a day where the QQQ and SPY are gapping down, and then they're going back up through my key moving average. That's my favorite. I hate chasing gap ups, although I still do it from time to time, but that is my preferred. Yeah.
Too late.
Still fine too, but maybe a longer base. I don't know. It is a long base. I mean, it could get going any moment. You start taking out prior day high, it looks pretty good. SYM Symbiosis. This doesn't look too bad either. If it can take out yesterday's highs, it looks pretty decent. Has a 50 undercut and rally. You know, coin's got to reclaim the 50-day. If coin can't reclaim the 50-day, then it just doesn't matter. There's too many other names that look great for you to be worried about a stock living below the 50 simple moving average. TEM's cool. I don't mind the volatility that's been coming into this thing. I'd like to see price flatten out somewhere. I personally hate rising channels, and this is kind of what this feels like. I'd like to see price flatten out somewhere so I can get involved. One of the easiest ways to not be a boom and bust trader is to use progressive exposure. Yeah, I don't think your idea of like how you actually utilize progressive exposure is probably not correct, but you know, if you use progressive exposure correctly, then that should help you not be a boom and bust trader. Also, your stock selection's probably not all that great. You know, progressive exposure works
so
well if you're focused on names and good
let's
groups.
crank out this breakdown here.
Semis look strong. The problem is I look at a name like CRDO, and we're going vertical here. $168 now. Yeah, this is they look strong, but you got to be a little bit cautious. You know, this is vertical for this name. Gorgeous move. It's not just SNDK, it's also MU. It's also STX. Yeah, I think the solars have bottomed. I don't know that this, you know, goes all the way back. It could.
Sorry about the sound, guys.
Yeah, MU up 5% pre. Man, I should have bought this last
You're
Thursday.
gonna hear some weird
120.
sounds for a second.
I don't really like Intel. I know people keep mentioning it. I mean, it's got a beautiful high type flag. If it can kind of get going over this 2490s, $25 level, looks fine. But you know, it's just a not special name, right? The market's been on fire for months, and this thing's been doing what since
15
April?
to 300.
Flex looks like a good breakout. If you would have bought it on 822. You found AMSC from the FinViz screener? Nice name.
All right, let's do a little breakdown here. I don't know why I have this up twice, but here we go. And we will get going here, guys. A Chinese scam stock just went from 15 to 300 in a few hours. There were traders, investors who lost hundreds of thousands, probably millions of dollars on an individual basis. There was one trader who made $18,000 on a stock that every single person seems to have lost on. Let's take a look at how he did it. So here is the trader. This is a website called Kinfo. If you look up what Kinfo does, this is what they do. What is kinfo.com? You can see ChatGPT tells us it's verified trading performance. How do we know it's verified? Well, it integrates directly with major US brokers, imports your trade history, and tells people how much you made. Okay? Integrates with all major US brokers, ones you've heard of. So, I'm just telling you that so you know what I'm looking at. This is Kinfo. And this investor is called the Kaido trading method. On Kinfo, he's called the Kaido trading enigma. His name is Adam. Why am I telling you this? Because I want you guys to see his profit curve, which is over $9 million. He's had some big losses, you can see, but they've never gone below levels that he was at 6 months ago or so. You can see on this chart, this is about from July to, well, next July is over here. So this is a year right here. So he has had periods of a year where he made less than, say, a couple $100,000, it looks like. But over 1, 2, 3, 4, I think this is about 5 years, 2025 from 2020, he's made about $9 million. So I'm just telling you that to show that this isn't a fluke. Okay, he made 18,000 on QMMM, and he did that by shorting, which if you're not a short seller, I'm not telling you to become one because it is dangerous, but I'm telling you this is how this $9 million verified trader did make 18,000. He shorted 1,200 shares at 180, and he covered 1,200 at 165, the same 1,200. I don't think he had another position because he doesn't have any other trades on QMMM on this verified trade ledger. So this was on the 9th. So let's zoom into the chart. So this is September 9th. Today is the 11th, which is Thursday. So the 9th was Tuesday. Okay, here we are today. This is the move that we're talking about here. About $15 to $300. and his short was from 180 to 155. So if we zoom in here, that's somewhere in this area, okay, on the quote-unquote backside. I say quote-unquote because you never really know it's the backside until it's already happened. It's hindsight to say something's the backside, but you can identify it in real time if you're very good at trading. Not every time. I showed you his profit curve. It's gone down. He's had big losses, but over time he's made $9 million. So that's why we're looking at this trade again. And if we really zoom in, which, because it's so close to that day, this particular charting software called Thinkorswim is not going to be able to show us yesterday. If we just put the end of the show us yesterday, then we can, which is pretty granular. Now you could use candles that are, right? There are charting softwares that allow candles, 30-second candles. Brokers that of course show you the level 2 so you can see exactly what the price is at any given moment and what the bids and asks are. That's what a level 2 is. See this up here? That's the bid and the ask. And over here, if you click on L2, you can see what is stacked on the bid and ask right here. So those are all the orders. But we're looking in hindsight, so we don't have to look at that right now. Anyway, that'll show the bids and asks at the end of the day, which is the time I have up here. But big picture, why am I getting so granular? Well, because if you don't get granular on a stock like this, you could lose everything. And I mean that. If you short even 10 shares down here at $15, up at the top at $30, you're down 10 times 280, $2,800. And that's 10 shares. So what did he do? He shorted at 180 here, somewhere around here, and covered at 150, okay? The low of this candle you can see is 158, but if we go over and include after hours here, you can see it definitely went below 150. Here, it went, sort of touched 150 here, and you can see probably what he did was he may have covered his position when it looked like this could go back up. So if he got in any time around here in the after hours when the volume is pretty low, but again, he only had 1,200 shares. So you can see the volume down here. This volume is 18,000. If he only had 1,200, that's less than 10% of that volume at that time. And if he can cover over time, which he can, he's able to get out without moving the stock. Now, in this particular case, I don't think he did cover over time. I think he just covered all in one, because there are cases where Kinfo will show multiple transactions, meaning he shorted and covered in more than just one block, one lot. It's not really a lot, it's not the right word, but more than one block. But in this case, I think he shorted here around 180 and then covered around 150 in 2 trades, not in a bunch of trades that added up to those 1,200 shares. So that's the recap for this ticker, and the reason I'm talking about this ticker is it is a China scam. It's not so much an anomaly given how many we've seen that have done this. And when I say done this, I mean gone from pennies or a few dollars up to hundreds of dollars or more without news and in a way that's clearly not representative of their value. to say it in the most charitable way possible. And another stock that's done this recently that you may recognize is XXII. And if I zoom out on a 1-year chart here, you can see this volume right here. So it has had some spikes up even after some big spikes up, like this day in particular, when it went from 25 to 55. Okay? So these are moves without any fundamental reason, and that's why the bias is on the short side. This particular ticker is QMMM. This particular win is $18,000. And if you search on X, you will see some other commentary about these Chinese listed, US listed Chinese companies. And you're not going to want to trust everything you hear, such as the next tickers that are going to go up, because in general, it's very hard to predict tiny companies that are going to go up. It's much easier to predict when they're going to go down, with the caveat that the reason this particular ticker is of such interest and this particular win that's verified on this ticker is of such interest because so many people lost on this ticker. And when you're a short seller, just to close it out here, what happens is you win 90% of the time. And that's what everyone wants, particularly newer traders, to win almost all the time. It means you must know what you're doing, right? Yes and no, because for short selling these tiny companies, they're expected to fail. So 9 out of 10 of them do fail. You know that. You know that 9 out of 10 businesses, small businesses, fail. And that's what these are. These are tiny startups, or sometimes just vehicles with some potential of growing into a startup. The problem is the 1 out of 10 can wipe out those 9. So if you can avoid that one, if you can even make money on it, like this Kaido Trading Enigma, verified on Kinvo, a Kaido Trading Method, Adam did, then you can stay ahead of the pack. You can make money overall rather than losing it. And if you want to learn more about this method, head over to akaidotradingmethod.com. I'll actually bring that up right here on the screen just so you make sure you end up in the place I'm talking about. akaidotradingmethod.com. This is what the website looks like. We're not totally loving the website. We're not web designers, but this is a verified trader. If you enter in your info, that's some of my info here, so I'll just enter some info in. You can see this free 7-minute video, okay, right here. I'm not going to play it for you. That's the whole point, is it's a trade, right? You trade your email for that video. But hope you guys are doing well. Check out that video. Congratulate Adam if you come across him on X for that $18,000 win. And I hope you have a great day. All right, let's get back to this pre-market prep.
Another one that I'm focused on is this AOI. I think IWM looks fine. Shouldn't be too long before this thing's at an all-time high, in my opinion. What are you, 8 points away, 9 points away? More than likely, we end up at an all-time high soon. Nah. Thursday the 21st? Yeah, probably. But not here. I didn't see the date you put, but yeah. Yeah, there was a setup here. Maybe better on the 22nd. You wouldn't have gotten stopped out, but that would have sucked, right? You get a nice push, and then you're watching it all come back, only to keep ramping. You wouldn't have gotten stopped out, but that would have sucked, right? You get a nice push, and then you're watching it all come back, only to keep ramping. Yeah, 21st wouldn't have been too bad.
From 15.
Sorry guys, I can have the screen.
In a few hours, there were traders, investors who lost hundreds of thousands, probably millions of dollars. There was one trader who made $18,000 on a stock that every single person seems to have lost on. Let's take a look at how he did it. So here is the trader. This is a website called
You hit your
Kinfo.
target of
If you look up
21% on
what
both
Kinfo
ALAB and
does,
CRDO.
This is what they do. What is
Well, you should
Kinfo.com?
you shouldn't keep targets.
You can
That's silly. Right? You shouldn't try to guess how high a stock can go before you trim. And if it's gone up that much, I would absolutely trim. Personally, you can do whatever you want, but
You can see that screen now, right?
when something's gone up that much, like CRDO, I wouldn't just be looking to add the first pullback. I would look to trim and then just trail, on the 20 and the 50 day, effectively. If you're up 21% on CRDO, where the hell did you buy this thing? You just bought this thing a few days ago, 9.4. If I'm not going to be at the screens, I set a stop manually. You miss SanDisk by a literal penny? I don't understand. Here's the thing. If something's moving out from a base and I hear stuff like that, you miss SanDisk by a literal penny, that doesn't make any real sense to my brain. Because if you size something properly on a $50 stock, 1 cent shouldn't matter. 10 cents shouldn't matter. Right? And if you missed it, or like you still think it's going to go, take a half size position, right? What's wrong with a 5% position? What's wrong with a 8% position? Why does it got to be 10, 15, or 20, right? You take a 5-10% position in something like SNDK, and then it's up 60%. Right? You didn't need a 20% position. So when I hear stuff like you missed it by a literal penny, then that just means you're typically oversizing your positions. Index futures actually aren't down. They're all green right now. So you need to focus more on your position sizing. I know your name is I Manage Risk, but yeah, ETHE looks pretty interesting. It's ETHU that I like a little bit more, but yeah. It's gapping up this morning. Hinge recent IPO. Yep. Well, my favorite weekly base is probably still in Tesla, but there are names like AAOI that look good. ETHU is pretty interesting. Palantir looks like it's in a continued uptrend. We'll see if I can add to some ARC. I'm trying to add more to my PDD eventually. We'll see. Yeah, eventually Rocket Lab's going to need over 51. But yeah, it looks pretty good. Man, CLS hurts to just look at. I own this name at $100. Yeah, CLS doesn't look bad. Looks pretty good, honestly. It really depends how they're acting versus the market. Like if I bought something and it's really not moving, but the market's going down, then it's showing relative strength. If I bought something and it's not moving, but the market's ripping, then it's got relative weakness. I don't want to be in names that are showing relative weakness. Concentrate your portfolio a little bit more. Go more like 10 to 15% positions then. And then look to add to names that are already working in your portfolio. That's a beautiful trade, Couch. Yeah, AOI is beautiful. I did not add any Tesla yesterday. But I've got about a 350 average if I'm not mistaken. I have a $350.57. So we'll see. My Friday entry has all the way down to the 300 or 200 simple moving average on Tesla. I'm giving it room all the way down here. It's very simple. A 620 setup is all done on a 5-minute chart. You're looking at a daily for your key area, and then you're zooming into the 5-minute, and you're waiting for the moving averages on a 5-minute chart to cross up, the 6 and the 20 EMA. Oh, man. CLS was terrible. I bought Palantir originally at $100 through this flat base breakout right here on April 23rd. And I stopped out the day of earnings, unfortunately, this gap down. It was a pickup in volume, and I didn't want to see this thing drop all the way back down to my average. In fact, the 20-day, was a little bit lower, and I'm like, man, if this thing drops all the way down to 103, I was like, that's going to suck, right? From going up 25% to only being up 3% on my position. So I just cut the last of my shares. I did trim some into the strength. I felt like, big old smarty pants for doing so. And then I felt like an even smarter guy for getting rid of the last of it, only to feel like an asshole a few days later. So, yeah, they didn't make it easy. My strategy for adding to winners is to treat it like I didn't own it. So, I was once talking to Lance about this, and Lance said something really important. He said, anytime you take a trade, right, your cost basis isn't important. He said, but if you're going to add to your position, there needs to be positive expected value. So what does that mean? It's like you have to treat it as if you didn't own it already. And if you didn't own it and your average wasn't way lower, would you be a buyer here on this next setup, right? And then when you are a buyer, right, I treat it as if I didn't own it, meaning I don't just widen out my stop because now my average is still way lower. I still treat my newest position as a new buy, and I set my stop at the low of day or prior low of day or against a key moving average like I normally do. And I size right like I normally do. So I just add to it as if I didn't own it. I like waiting a few minutes after the open. PDD's moving just very slowly. Yeah, it's kind of random. AMPX. Everybody's looking at this damn AMPX. It looks good. I don't know what this move's all about, but is there news? So by treating it like you don't own it for the ad, does this ad? Yes. So anytime I add to the position, it has a new stop loss. Like the added shares have a stop loss of low a day. When is my stop loss not low of day? When it's very tight to prior low of day. So when prior low of day was a very narrow range bar, and then I'm buying it over that prior day high, I might not be using today's low. I might be using yesterday's low. And it also depends how quickly the stock moves. Like if it's a slower name, like when you're trading like a JP Morgan or something like that, which you guys might never find yourself in that situation, then I'm using prior low of day. UMAC, PDYN. Make sure you've got some scans. Sit down at the desk in the evening and scan and go through the market. Go through what the volume movers were, go through the biggest percent gainers of the day, go through the leading groups of the day, go through your 3-month relative strength scan, go through your daily relative strength scan, go through your monthly relative strength scan. Like just go through all of your scans. Go through your down on volume scan, go through your, your worst groups in the market. You want to know where money's going, where money's leaving. That's very important. Your end of day process should maybe take you 30 minutes to 1 hour at most. Scan through the names you like, set your alerts, try to put the puzzle together in your head, and then come to the market the next day, relook at those names, try to pair it up with a good market when you do some buying, and that's it. That's literally it. Where do we get these scans? Well, they don't sell them at the store. You got to build them. You can build them on Thinkorswim. You could get them on DeepView. You can get them on Market Surge. You can build them on FinViz. And by get them, you got to build them. You got to build them for the criteria that you're looking for.
I don't need. That's a lot of scans.
If you don't know what criteria you're looking for, then that's a whole nother something else you got to tackle. I don't trade options. Normally, under most scenarios, the second you break today's low or prior day's low, I exit. Do I have a max risk that I limit myself to? Like if a position is 1% risk, very rarely is a position 1% risk. That's a very, very tight stop loss. I don't, now, do you mean 1% risk of the portfolio? Because that never happens either. But like if I buy something at, $70, I don't usually have a 70-cent stop, right? Usually stop to low day might be like $1.50, $2, or it could be prior day low, maybe $3. So it's more like a 4% stop. In which case I'll take like a, 8 to 10% position, and I've got like 0.4% risk of my portfolio. Dave, I mentioned it already. A 620 setup, you're looking at a daily time frame. right? Okay, so here's the other day on Tesla. So a 620 setup is when price is approaching a key moving average, which it was about the 5-day, and then the 6 period starts to turn back up above the 20, and here's where your entry could be, right? With your stop at low of day, knowing that you're buying within a range, right? And it still hasn't broken out, but you're buying it against the 5 and the 10-day. And it never hit low of day, right? And all that happened was this thing ripped yesterday. Yes, it gave a bunch of it back, but you've got your entry tactic. How many stocks should one hold if the account size is 6K? Don't look at your account size like you can only own like one name, right? Do the right thing over and over and over and over and over, and eventually your account gets bigger. Like, don't think you gotta get like these 20 and 30 and 40% positions into your portfolio just because your account's small, right? Get you like the emotion of losing $60 or $50 or $40, even when your account's only 6K, is the same as me losing more, right? It's because it's all about percentages. Stop looking at the money. Start thinking about things in terms of percentage. It's easier to stomach that way. Like when you start thinking about, oh, my account's $6,000, how much should I have per trade? It's a percent thing, right? If I say you should have 10 to 20% of your money in a position, right? Then you know what that equals, right? That's $600 to $1,200, right? It's not, oh, I've got only 6,000. I need to risk more. It's just the opposite, really. Just think about things in terms of percentage. I don't. So I treat every single position on its own merit and for its own price action. And this is the power. So like, how much would I risk in terms of portfolio total risk on all my positions? Here's the reality. This is where progressive exposure kind of keeps you out of trouble. Like if I'm in a position and it's working well, I can go get another one. And then if that's working well, I go get another one and then another one and then another one. So the worst I ever do is I'm risking unrealized gains. If I buy, let's say I have no money invested and I buy something and then it just doesn't work, right? I take my little loss, there's like 0.3% portfolio hit. And then if I buy something else that doesn't work, I take my hit. And then if I buy something else and it doesn't work and I take my hit. Now all of a sudden I've lost 3-4 trades in a row. I might have lost about 1% of my equity, 1.2%, 1.5%, something like that. And I'm just like, okay, I'm not seeing things well, one, or the market's being choppy and unfriendly, or I'm not trading stocks in the right group. Okay, so now I really know my problems because it's always stemmed down to that. So I size down. So I go to 5% positions. And if I can't gain traction on 10%, I should assume that I probably can't gain traction on 5%. But if I start to gain traction, right, I'm either trading stocks in the right group, in a good market where every bozo's making money, myself included, right? Or I'm seeing things well, or a combination of all three. Then all of a sudden, I have a 5% position that's working. I take another one, that's working. I take another one, that's working. Of the three names, a few days later, I'm able to add to one of them. The next day I come back, I can get a 10% position on because now I'm working behind some unrealized gains and some traction. And all of a sudden I start to make up for my little
Intel
hole
looks
that I put
interesting
myself
now,
in,
huh?
very small hole that only takes one or two names to get yourself out of by holding it properly. So I think that's like a much easier way of looking at it. I'm never really risking a big chunk of my portfolio because of progressive exposure. And I think people kind of lose sight of that. Like I give back unrealized gains all the time. But like from like closing equity, right? Like realized gains, I'm never really in a huge drawdown. right? Do I give back open gains all the time? All the time, right? Where it's like, man, my portfolio was up here, but I had a bunch of trades in the green and I still treat every single position. Like once I get my money to work and it's 10% of my money, I stop babysitting that stock. My stop is in. I've already accepted the loss before I've gotten in and I just let it work, right? The job isn't to micromanage every single position I'm in. I've got the other 90% of my money I still need to get into the market, right? Once I'm in 2, 3 stocks that are working and I've already got 40 to 50% of my money in the market, I don't babysit those anymore. They're all working, hence the reason that I've got 4 or 5 names on, right? Like, for instance, I don't give a shit about ARK anymore, right? I've owned it since 6, right? I'm not babysitting this thing anymore unless I go to add a position to it, and then I can keep a close eye on my new ad. But I'm not babysitting my like $59 cost basis. I'm not even thinking about ARK anymore. I don't get happy about it. I don't celebrate it. I don't say ooh ah and oh my god, I'm making so much money. It doesn't matter. I'm focused on getting the rest of my money to work. And so yeah, I'm never really I'm risking more on the unrealized side normally than on the realized side. The scripts were built. You got to build the scripts, and now with AI, you can build them in an hour. The 6-period EMA,
This is it, boys
moving
and girls.
average.
It is the CPI
Thanks, DT. Appreciate you,
Inflation Day. Obviously, a lot of enthusiasm yesterday because specifically things that would slow down because of tariff inventory building did slow down yesterday because of PPI.
You exit all your position on the 10 SMA, like what Cool Maggie. Well, Christian holds his
Sorry
stock
about that.
so long as they're holding the 10 and the 20.
Opened up a tab I didn't mean to.
So long as they're above the 10 and the 20, he doesn't really exit. So my strategy is always this, and again, it's a little, it varies just a little bit, but if I buy a breakout and then it goes on to push for 3 to 5 days, I trim some off into that strength. And then from there, I just trail the ascending 10 and the 20, right? Again, we could look at ARK as an example. So ARK in this push, right? I trim some off, right? I bought it here. I'm trimming some off in here. And then at this point, I am just trailing this 10-day. Once this thing begins to pull back the way it did right day, once this thing begins to pull back the way it did right in here, right? It found support on the rising 10-day. So mentally, my stop now becomes this low day that I bought it, right? Because the next day it was higher, right? And then I'm literally just trailing the 10 and the 20. And once price begins to pull back or pull back a little bit steeper, right? Like even this didn't bother me. Why didn't this pullback bother me? Because I'm fully trimmed. And this pullback here where it kept going higher, this, just like this, becomes my new stop mentally, right? And then you push off higher, right? I'm already trimmed on the position. I already think this thing can go higher. You know, this little move down doesn't bother me. Let's see how it acts the next day. And immediately it starts pushing right back up, right? That's why these pullbacks didn't bother me, because each one of these subsequent pullbacks have been higher than this spot right here, right? This pullback became my new mental stop. And then this entire time, this thing's now been finding support at the rising 50. And everything has retightened just like it was getting nice and tight in here, right? A little bit sloppier, but now everything's nice and clean and a fresh new base, a whole new base. That looks a lot like the NASDAQ, right? So in my mind, if the NASDAQ's going to go on to work, then it's likely that speculative names go on to work, and it's likely that the good names that Kathy owns in her ARK ETF, like Tesla, if the NASDAQ's going to go on to work, then it's likely that speculative names go on to work, and it's likely that the good names that Kathy owns in her ARK ETF, like Tesla, Palantir, Hood, Roblox, those can continue to work. So to continue to now trail the 50 day, right? And you have to be, that's why I trim into strength. It allows me to hold through stuff like this, right? I've already paid my fact, I paid myself lower, right? In hindsight, if I had it, I would have trimmed up here. On this day it fell for the first time. Instead, I trimmed way lower, or I would have trimmed into this little bit of strength, but I didn't, right? And so now that I've trimmed lower, I can't really mess with it anymore. You just have to trail, and trailing so far,
I don't know why it's skipping.
it's done
Should
nothing
be okay
wrong.
now.
It's done nothing right. I haven't really made any more money, but it's not doing anything wrong, and I own it from much lower, right? So that's the key. And then I just let it work. It really depends. Like, if something was tight against my stop loss level, it's a good question. Do I wait till the close to sell, or do you always put hard stops in what will hit mechanically? So if it's like early in the day and a stock is like already near my stop level and it starts to break down through it, but there's heavy volume right at the open, I just cut it, right? I just cut it. But like if you're like midday and you're kind of like, you're like, it's had to fall like 3-4% just to get to my stop level, normally I'm going to give it a small little chance to bounce, which I might. And it also depends where I own it. Like, the last thing I like doing is watching a nice green trade go red. That's like sacrilegious in my book. So, but if I'm already have some realized gains on it, and then, I'm like, okay, I'm going to trail the 50. But then all of a sudden, this thing breaks the 50 on this day, but by the end of the day, it reclaims. And it breaks the 50 on this day, but instantly gets bought back up. I'm being a little bit more patient because I own it from so much lower. So again, there's like caveats to that question, but like it's on a name by name basis. I think Futu was awesome near what we talked about. Futu down here in the room. This is where I liked Futu the most. 7-7 I thought was great. Obviously it had this little upper wick, so it's kind of a pain in the butt. But it ended up breaking a nice flat base the very next day. So subtle gap up and then off to the races. I think Futu looks great. Ideally the 50 can catch up and this thing can just chop around for a few more weeks or something. Who knows? You could. But here's the thing. It's like eventually, that 0.5% risk on 60,000, becomes $300, and on 600,000, becomes $3,000. So, it eventually becomes real money in the real world, right? Like $30, you might be like, it's not that much. But I think instead of focusing on the money, think about things in terms of percentage and process, right? Like, what's the percentage loss? Percent matters, right? There's going to be periods as swing traders where like you lose 10, 12 in a row, 15 in a row. That's just what happens, right? There's going to be a rough patch in the career. There always is. Now, are they easy to overcome if you recognize by the time you're on your third and your fourth and your fifth loss to size down? Yeah. And then oftentimes I've had losses that are 0.2, right? I could take 15 losses in a row and I've lost 3% of the account. Like, I could live with that, right? I'll be okay. But yeah, think of things in terms of percentage. When do I go about moving my stop up to break even? After the third through the fifth day, roughly. If I can get a nice push. Sometimes even by day 2. Like, if I'm dealing in, like, call it ARC, right? We'll go back to ARC as an example, right? By the time we got to day 3, there was no letting this thing go back and go red on me, right? If you get this kind of push and this push on volume, right? This sometimes even on day 1, I'll go, man, look at the volume that just came into this thing on day 1. I'm not going to let this thing go low at
Intel
base
looks
stop.
pretty
It
good,
shouldn't
guys.
even come back to 59. I have multiple trading accounts, but I don't separate them for like long-term trading versus, there is no long-term trading. If a stock wants to be in a long-term uptrend and I can catch it, then it's a long-term trade. But I don't know that this is going to happen the day that I buy it. Right? So I don't separate my accounts for that reason. It happens all the time. Not all the time. CNC, I wouldn't even focus on this, dude. It's below a falling 200 day. A full trim could be, 30 to 50% of the position. You can set these kind of orders on, you can create them on Thinkorswim. Yeah, ARC, I'm looking to add more. Right? I don't know that I have to wait for 79, but over yesterday's highs would be pretty good. How do I control FOMO? FOMO is only for people who think that their career is going to be short. So like if you missed a trade, you're like, oh my God, I missed it. I knew it. I got to buy it. Like, slow down, right? It's going to be a 40-year career. You don't think you're going to find more stocks that go and make awesome moves? Right? You don't think that you think like people who suffer from FOMO act as if the career is over tomorrow. Right? Like you have to make money today. That's total nonsense.
I don't think there's any major
FSLR is
updates to
showing
the
a bit of relative
Intel
strength compared to its
stake
peers.
situation.
Right? Look at what FSLR is doing.
But
Effectively
man, that
nothing.
looks good.
Right? But then look at what Sedge is doing. Really getting beaten up. Right? Look at what EMPH is doing. Right? Not really doing anything, actually. And run. Again, kind of coming down. There's nothing really going wrong with these. Like, I don't think that they're broken by any means, but FSLR is probably still the favorite of the bunch. A little choppy, though. A little choppy. Do I ever use intraday stops? Yeah.
Check NVIDIA
Higher than the low of the day?
earnings info.
No, not often.
I get that earnings reaction wasn't great, but still.
Yeah, stock surfing. I'm effectively live streaming in the room all day. Sometimes I try to get off a little bit earlier just for the sake of my back, but if I'm at the desk, I'm live streaming.
August 27th.
What are 3 to 5 non-negotiable criteria a chart must meet before you even consider taking the trade? Ooh. Well, there's got to be a tight spot for me to buy and manage risk, right? So that's number one. It's got to be in a top group. Doesn't have to be like the best group, but I'd like to there be a relevant theme or be in a top group. And then ideally the stock could have some earnings and sales. I won't say that's a non-negotiable because I have traded stocks that don't really have earnings and sales, but you kind of align those three things in your favor where it's got good earnings and sales, it's in a good group, and it's got a good technical setup where you can manage risk. That's like the holy trinity. That's like that's literally how you manage risk.
Price targets.
You're trading stocks in theme, and there's a reason for institutions to buy them. They've got good earnings and sales, accelerating earnings and
Ignore
sales.
this China stock.
Would I cut a trade if it doesn't go anywhere is what you meant. And I've kind of answered this. You have to think about it as how's my stock acting versus the market. If your stock hasn't gone anywhere but the stock market is ripping, then yeah, you probably need to exit. But if my little doggy came to say hi, but if your stock is doing nothing, If the stock market's ripping and your stock is going nowhere, your stock is showing relative weakness. If the stock market's dumping and your stock is going nowhere, then your stock is showing relative strength. Don't cut stocks that are showing relative strength so long as they're still above your cost basis, your stop loss level, etc. All right, guys. I appreciate you all for being here. I got to get my butt moving. I got stream to join. So we could talk about this. George, we'll talk about this tomorrow. Please re-ask that question. I got to get going. Much love. Thank you guys for being here. There's a ton of you guys. Awesome questions today. Probably a lot of little golden nuggets. Trade them well today, and I will see you guys bright and early tomorrow morning. Yep, later.
All right, guys, let's jump into this analysis right here. So, I'm going to do a little breakdown here of Intel. I don't know that you want to buy it right at this exact moment, but just because this gnarly action, but I mean, if you risk down here, maybe you do. So let's think about this for a second. We can actually be a little bit louder. If that's okay. Okay. There we go. That should be plenty loud. Sorry about the little noises. They'll be gone in a second. 5, 4, 3, 2, 1. Noises are gone. All right. You can see me up here. Okay. So, I think Intel is a good deal right now. All right. And you're going to hear some music too. Sorry about that, but it's all part of the breakdown. There's one stock that has an unprecedented deal, and you've probably heard of this stock before. It's Intel. The deal you've heard of before too, if you've been paying attention the past month, the 10% stake that the government is taking in Intel. Seems like it's going to happen. It's a pretty hefty concession. I don't think everyone was excited that Howard Lutnick, the CEO of Cantor Fitzgerald, is striking deals like this, or at least facilitating them. But at the same time, for us, you know, it might be time to buy some Intel because this company has been in the dumps, and it finally looks like there's a catalyst that can make this move up. So let's take a look at the chart right here. You can see how coiled it's been, and just looking at it immediately, it looks like this is interesting. $25 is the level to buy it through, and we're pretty close right here. Today, Thursday, September 11th, 2025, we did have some moves up, moves down. We did have CPI, which didn't actually affect the broader market that much, even though there is some inflation increased as prices went up, but the market response was totally bullish. So Intel didn't follow it quite as closely. NVIDIA didn't follow either. So we don't have to worry too much about Intel's response being lackluster given that semis as a whole, if we look at the semi ETF, didn't move much. Now, zooming out, this is why we're interested in Intel. Because this stock's been beaten down for a couple months, it's gone sideways. And if we look on a 5-year chart, it's been down for a while. Fortunately, it is in the semi group. And if we look at NVIDIA, which just had earnings recently, the response was muted, but it has come back up to that earnings level. And we just had Broadcom with this massive move. Broadcom also had some sort of unprecedented news as well. There's a lot of news that is kind of one of a kind in this presidency. Broadcom did have that $10 billion order for OpenAI. So that's the reason for this move. CRDO, though, also absolutely massive move upward. And that earnings reaction was huge, okay? So with all that backdrop, CRDO revenue was up almost 300% year over year, which is insane. Here we go. This is Intel, though. This is the one that hasn't gone yet, okay? Which is why we're talking about it. So if we look at the price levels, not just 25, which is right here, going back to February, March, and the past month, it's been coiled near that level. There is a lot of green sky up here, blue sky, green opportunity for your portfolio, okay? And that's this initial dump level back from July of last year that it can get towards. So that's the risk reward opportunity, okay? A lot of space, gap fill, and incredibly tightly coiled, meaning you can risk $1 or actually less than $1, just 25 cents or something, and be able to have a lot of upside. If you're more about fundamentals, why buy Intel? Well, I do think that the stake is the most important update right now. However, if we even just ask ChatGPT, why buy Intel right now? Give recent news and updates within the past 7 days. And the reason I'm saying the past 7 days is that the stake news has been in the news for weeks now. And Intel did move, actually. If you look, it did. After that muted earnings reaction, it bounced back. The reason it bounced back was the 10% Trump stake. Now, 10% sounds like a lot, but also keep in mind this is a stock that really hasn't been doing anything. So it's not like the 10% stake in NVIDIA, which is already a stock that's crushing it. It's a stock that's basically laggard. Okay. There have been some leadership changes, but they aren't altogether negative. Okay. So someone who's from ARM is Qualcomm. These are companies that are positives. They're better shape than Intel, almost certainly, which means that these leadership changes are actually not net negatives. And then they do have some product roadmap then into billion, and they are also in the money as well. Billion, and they are also in the money as well. So if people are making money, these, I don't think this is that notable. And I don't know that the CFO comments are exactly what we want to be paying attention to. What we really need to be paying attention to is any changes with this 10% CHIPS Act deal. Okay? Right now it seems promising. Everything seems good. But yeah, we got to be careful, and we do have to take a look at the other semi names as well. But we did look at them earlier. I looked at the charts and they look good. If we look at TSM, it looks, I think it looks okay. But there's really no chart that looks better than this coiled flag on Intel. So I think we just have to be really optimistic about this, because whereas a lot of these semi stocks have already gone, TSM is looking a lot like AVGO and looking a lot like CRDO. Intel's the one that hasn't gone. So that's why we're looking at it with $25 again. I'm going to harp on that number. That is the level to take a look at. So with all that said, people are going to be paying attention to NVIDIA. People are going to be paying attention to AMD. But right now, there is no better stock in the market for a high reward, low risk, long buying opportunity than Intel. And if this stock crosses $25, you're going to want to do your own diligence, manage your own risk, but I think you want to buy it. Subscribe for more. See you in the next one. Let's see what else Ariel has to say from yesterday. Do want to catch up on home builders as well. There we go. Should be able to hear him, see what he's up to.
All right. PPI.
Tesla is definitely on the docket. Super interested in Tesla. Don't understand why Ariel's not coming through.
Good morning, guys.
Should be plenty loud. Right?
Yeah, GEV. Nice little gap up.
Plenty
I know
loud.
BE had a nice gap up. Yeah, market just had PPI. So that's good. Kind of get that out of the way. And the markets are ripping on the back of that.
There we go. There we go. He's just quiet. And he was getting started, I guess. Sorry about that.
How long can it keep going? I mean, Google can keep going. Here's the thing is that, like, even if you owned it, you know, it could just go sideways and let the 10-day catch up and be completely fine. So, you know, My opinion on how high something can keep going is totally irrelevant to anybody's process, right? You can't really buy it here. It's a little extended, but if you already own it, then you're fine. Yeah, Oracle massive gap up, man. They have a huge backlog. I mean, 320s. Holy cow. What an insane move. Yeah, a lot of names are gapping up right now. It wasn't even just those. It was like
Oracle pulled
something
back
like
a little
Wolf
this
caught a bid
morning.
last night. What
Relative
else
weakness.
caught a bid last night? It was Wolf. I saw Hut perk up a little bit. So won't be too surprised if this thing's, mid 30s here pretty soon as well. Too many eyes on Tesla, in your opinion? Maybe. Yeah, Iron's another one. All I know is I own Tesla. I'm looking forward to that thing going higher soon. All the quantum stocks yesterday. I mean, they're not.
We should be
not
back,
dying,
guys.
I'll tell you that. AMD reclaimed the 50-day. Sure did. Nah. AR and RRC are below the 200-day. I mean, I'm sure they can get back up above, but I don't like guessing that something's going to go into an uptrend. I mean, maybe, right? Maybe it's at the lower trend line and then, it'll come back up above the 200, but that's all kind of guesswork, right? I don't really like to do guesswork. It's either already in an established uptrend in a good group with good earnings and sales, or it's not. And then I just don't trade it. Right? Like there's so many names in the market that if you start guessing at which are going to be in an uptrend, you end up wasting a lot. Right? Like there's so many names in the market that if you start guessing at which are going to be in an uptrend, yeah, there are